coming in here. Do you see this comment here? 1443. See, equity market makers are aggressively offering short-term rallies. Aggressively offering short-term rallies. Not just offering short-term rallies, aggressively offering into a short-term rally. 1443.00. Let's take a look at 1443.00. 1443.00. So here's our rally candle here. What happened next? Price dropped. Here's our rally candle here. What happened next? Price dropped. This is still 1443, right? Here's a rally candle here. What happened? Price dropped. Yeah? And we got a really, really sweet little price drop. You see how beautiful that was? That was sweet, wasn't it? So you get this idea that recognizing this type of activity can be placed inside these trades, and we can start trying to figure out what it's doing. We might not agree with it, Theo. We're not asked to agree with it. What we're trying to do is just understand that it's there. We're not trying to say that it's a buy or a sell. What we're saying is that's what they're doing. Why they're doing it, it still has to be found out. Why they're doing it still has to be kind of figured out from here, but we still acknowledge that that's what they're doing. So if we can figure out that that's what they're doing, we start watching that storyline. Because look at what happened at 1444. Do you see what happened 1 minute later? You might say, come on to grips, it's a minute later. Look at what happened at 1444. The market maker started to bid the short term. Do you see that? Market maker started to bid the short term at 1444. So what happened at 1444? Well, there's 1444 coming into the market here. Do you see the bid? Well, there's the bid coming in there, isn't it? There's the bid coming in there. So you start saying, okay, well, there's the market maker starting to bid 1444. Let's get some buying done down into these dips. How did that buy turn out? So in other words, the market maker got it right there, and then the market maker got it right there. Unbelievable performance, if you ask me. I mean, it's world-class performance. World-class performance. All we've got to do is tie that in with the other stuff, haven't we? The idea of being able to recognize these things happening and then tying them into the other parts to your storyline is something that we can start looking for. As I said, we don't have to agree. Remember, the market maker might be bidding into dips. We might not get any dips. We might get no dips at all. The market maker might just be reacting to buyers coming in and therefore going bid on a buy, and the price drives. The price drives. That's why we're saying if they're reacting to buys, that's why we say they're going to buy on dips. But we've still got to see them buying on dips. We've still got to get that evidence that it's actually currently happening, because it might not be happening at this point. So we've got to still see it happening. We've got to try and figure out, is it going to happen? And we start looking into these areas for those pieces of evidence for something else that might take place. You know, we don't know what's going to happen in here. We don't know how it's going to play out. So we've got to try and figure out how it's going to play out. So here's a good example when the market maker aggressively offered into a short-term rally. Look, 1441, guys. This is the big one, right? The market maker is aggressively offering into the short-term rally at 1441. Aggressively, not just offering. Looks like they'll probably cross the spreads. Look, there's 1441 right there. Looks like they're going to aggressively cross the spreads. Look at what happened to the price. Do you see them? You see them aggressively crossing the spread there to get that deal done? That's incredible profit, isn't it? You may say, come on to grips, it's not incredible profits. It went 190 to 183.5. But this is based on a 1 minute chart, guys. I mean, we could obviously do better by taking it down into even lower time frames. These things are not held in isolation. That aggressive offer may have happened a lot earlier into the process. What do you mean the market makers might have been entering into this in an earlier process? Well, we have to look for these things. We always have to look for stories. They have to tie in with other elements. I mean, there's a big trade coming in here, for example. What is this trade here? There's a massive imbalance at that point. Is that going to be a sell trade or a buy trade? We don't know. This doesn't tell us. It just tells us that there's a massive buy-side imbalance in here that we've got to pay attention to. We've got to then highlight where the imbalance came in and look for the possibility that that might be a big buy level, or it might just reject above it and come straight back in which case it was just a big stop level. Massive big buy-side imbalance again here, massive. And we just highlight the imbalance. Well, the imbalance actually came from the previous candle. Look, it's all just zeros. Every single candle is just zeros. And then we started to see the rebalancing in here. And you look at that there and say, right, well, let's get some short business. Let's see how it plays out. So it's only part of a story, guys. It only ever will be part of a story. We've got to try and tie the elements together. And that's where the challenge is for everybody, is to try and tie the elements of these stories together. Whether we see dispersion activity, whether we don't, whether we see volatility, whether we don't, we've still got to tie it together. I see a lot of dispersion selling into this morning's business at the moment. At top edges. That doesn't mean it's bearish. We've got to tie that in with other pieces of a jigsaw puzzle, guys. There's more than one piece to every jigsaw puzzle. I love the 16,200 price level on a macro chart basis. Well, we're at 16,200. We've been buy-side NASDAQ since the beginning of the day because of the low inflation numbers. Because of the low inflation numbers, we've been buy-side NASDAQ since the beginning of the day. We've been long the Qs. It doesn't mean I'm long the Qs above 16,200. I'm long the Qs at 16,100. I'm long the Qs at 16,050. It just means that I acknowledge the other things that are going on in the background. Right about that, were we right